Welcome to All Stocks Index, a video series that breaks down the financial performance of every publicly traded company. In this video, we look at Netflix's financial results for fiscal year 2023. Netflix was founded on August 29, 1997. Headquartered in Los Gatos, California. Current co-CEOs Ted Sarandos and Greg Peters. Number of employees, 13,000. Market cap is $327 billion. Current stock price, $764. Netflix belongs to a communications services sector in the entertainment industry. Netflix is a streaming service that offers a wide variety of award-winning TV shows, movies, anime, documentaries, and more. DVDs by mail service was shut down in 2023. Let's analyze Netflix's financial performance for fiscal year 2023 by breaking down the 10K report. Let's begin with the income statement. Sale of products and services produces revenue, and after paying off all expenses, the company is left with net profit. In 2023, almost all Netflix's revenue came from streaming, with only 0.25% from DVDs by mail, which was shut down in September. Netflix's annual revenue has been growing for the last 10 years at an average rate of 23%. In the last year, Netflix's revenue reached a record of $33.7 billion. Cost of goods or services sold was 58%. Reported gross profit was over $14 billion, of which 50% was spent on operating expenses. Specifically, marketing was a whopping $2.6 billion expense, as well as technology and development at $2.6 billion. General and administrative was around $1.7 billion. Over the years, research and development has remained steady and slowly decreased from 9 to 8%. Operating expenses came down to around 21% in the last 4 years. But operating income has increased significantly in the last 10 years, reaching almost 21% in 2021 and 2023. Accounting for tax and other net expenses, we get a breakdown of all Netflix's expenditures. Thus, after subtracting all cost, we are left with a net profit of $5.4 billion. Netflix's net profit reached an all-time high in 2023. Profit margin, which is a ratio of net profit to total revenue, was 16%. Second highest of the decade, after 2021, when it reached over 17%. Earnings per share, a ratio of net profit to shares outstanding, was $12.03. It was a record even surpassing 2021's earnings. However, earnings growth is slowing down. Increasing revenue was the main driver behind the booming earnings. In addition, Netflix repurchased and retired 14.5 million shares in 2023. PE is a ratio of company's share price to its earnings. It was 50 at the time of the reporting. Netflix's PE ratio is slightly above the 5-year average. Turning our attention to the balance sheet, total assets equal total liabilities plus equity. Netflix holds a total of $48.7 billion in assets. The largest portion is content assets at $31.6 billion. Total liabilities is $28 billion, where half, $14 billion, is in long-term debt. Let's examine Netflix's ability to pay its short-term debt obligations. First, the cash ratio. We take the most liquid assets and divide by current liabilities. In fiscal year 2023, this ratio was around 0.81. It appears that Netflix almost always had less cash on hand than its current liabilities. However, current ratio of 1.12 suggests that Netflix has enough current assets to cover its current liabilities. Similarly, a quick ratio has always been above 1, indicating that Netflix is sufficiently liquid enough to cover its short-term liabilities. Checking the leverage ratio of total debt to total assets, we notice that after 2015, it increased at a faster rate than its assets. But after 2020 began to decrease and settled at 30%. Similarly, Even though debt peaked in 2019, shareholders' equity increased even greater afterwards, making Netflix a safe investment with lower debt obligations in 2022 and 2023. Return on assets has been increasing in the last 3 years, suggesting that Netflix has become more financially efficient. Return on equity has been favorable since 2018 and continues to be so. Breaking down the cash flow from operating activities, amortization of content attributed to the most of the cash inflow in fiscal year 2023. However, content additions expense was around $12.5 billion. As for investing, Netflix does not invest significant amounts in properties, equipment, or acquisitions, but instead it generated $1.4 billion from short-term investments. In 2023, Netflix did not repay any debt. Also, Netflix spent $6 billion on repurchase of common stock. So, does Netflix have cash? Strictly cash, Netflix has about $7 billion. If we add investments, that amount is slightly larger. However, Netflix has plenty of debt, so subtracting it from cash and cash equivalent amount leaves the company with negative $7.4 billion in total cash. Investors and analysts typically look at the company's free cash flows, which is calculated by subtracting capital expenditures from operating cash flows. In fiscal year 2020, Netflix did a 180 and reversed its free cash flow to positive levels, especially in 2023, when it reached a record-breaking $6.9 billion. Estimating free cash flows into the future and discounting them to present value, we can approximate the company's intrinsic value and derive its current share price. We calculate $674 a share. According to this model, Netflix is currently trading at a premium. That's all for now on Netflix. If you liked this video, please like and subscribe. We plan to provide similar content for all publicly traded companies.